What's going on, everyone? This is Andrew O'Connell with Pristine Capital coming at you with yet another market recap video. It is March 18th, 2021. Please like this video and subscribe to my channel if you enjoy this content, and I will continue to make it for you. Today we're going to be talking about the price action in the indices. We had some crazy price action today. We'll go under the hood and check out our sectors and style factors. We'll talk about some of my trades for the day, and we'll wrap up with some options order flow. But before we jump in, quick risk disclaimer. Nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan, your own risk parameters. And last but not least, do not YOLO your entire account into any one of my trades. All right, so let's jump right in here. And today was definitely what I would call an expectation breaker. So we had the S&P 500 finish down 1.45%. We had the NASDAQ QQQ finish down 3.06%. We had the IWM small caps finish down 3.04%. And we had the Dow Jones finish down 0.43%. So coming into today's session, we had Fed Wednesday yesterday. And it was like, oh, okay, we had a nice positive reaction to the Fed meeting. We actually had, a rally in treasuries. We had a rally, just in the broad markets, more specifically in the NASDAQ. So that made it seem like, okay, the market, is pretty comfortable with everything that happened at the meeting, the minutes, the Q&A. And I think that was sort of, for many traders, for myself, it definitely was. It was like a green light where it's like, okay, market's fine with the Fed meeting, we're in the clear. Today, we saw clearly that was not the case. So you can see for our S&P 500, normally for options expiration week, I do expect a lot of chop and sideways price action. Today, this is a huge range for the S&P 500. This candle pretty much did a bearish engulfing on the last pretty much 5 days of price action. So this is a pretty big move. And you can see that on our hourly chart here, pretty much, everything was kind of status quo throughout most of the day. We were kind of trending a little bit lower. We were having bounces intraday throughout. And it was like, all right, this is our typical, choppy action during options expiration. And then from 2 o'clock onward, that's when the rails completely just fell off. And you can see we closed within this weekly value area. We were trading above it prior. So now on our short term, we are in a neutral trend as opposed to an uptrend. So we'll have to see what happens with this price action tomorrow. Tomorrow we have options expiration, quad witching, we have index rebalancing. So there's a lot going on. And my expectation is like, this is not really a trending market, especially when you have the options expiration, all these external forces. So, it could end up being like, technology's oversold, so we're going to rebalance and move money from value to technology. It's very difficult. That's why, for the most part, I do like to sort of lighten up and do a little bit less trading during options expiration week, because the market oftentimes doesn't really trend during this week. If we take a look at the Qs, you can see here, really rough finish for the Qs. We went down to this weekly point of control. So we'll have to see. Maybe this is where the market finds support and we bounce off this level. But what I am cognizant of and really just, making sure I'm prepared for is that, tomorrow maybe we just pierce right through this weekly point of control and we tag this value area low. Not saying that it's going to happen, but I definitely just want to be aware. We did just fall through the top of value very quickly. So it's important to just be open to those possibilities. And if we take a look at our small caps here, small caps were pretty strong throughout the day. At one point, they were actually positive for the session. And you can see the small caps, on this hourly chart, fell into this weekly value area. And you can see they're under the point of control. So we'll have to see if we get a test of this value area low at 222.35. Dow Jones was still pretty strong. So Dow Jones finished off, just slightly down 0.43%. You You can see Dow Jones is still above the weekly value area. Yeah, so you can see right here. Let's take a look at our sectors and style factors. And we'll take a look at this heat map. So you can see here, you know, complete flip-flop from yesterday. We got major selling in tech. You can see Tesla's down 6.93%, Apple down big, Microsoft, Google, you know, all these tech companies. And really what it seems like is a lot of the upward progress we made during the past, you know, week or two was kind of erased in one fell swoop. You can see the financials finished out positive. You know, the financials were very strong today because the yield curve was really steepening. And you can see we had sort of like a mini crash in oil. So let's take a look here. We'll pull up our bonds. And you can see here, you know, the 10-year treasuries yesterday put in a doji candle. And today we have, you know, pretty big red candle here where, you know, we did get a yield spike. If I pull up, let me see where this is. Not here. Yeah, here we are. I'm going to pull up our yield curve. Let's see. There it is. So yeah, if you look at the level to which the curve is steepening, you know, this is pretty extreme here. This is pricing in, like, we're going to have a magnificent economic recovery. One thing that I find super interesting is, like, all the data coming out for March and April, that's probably going to be the strongest data that we get on a rate of change basis because we're going to be comping up against, you know, what the economy looked like when it was completely shut down. So we're getting this big move, and this, in my opinion, we're getting into essentially like peak cycle where the growth is going to look the best, you know, it'll likely ever look. You can see curve is very steep. You know, the 10-year is approaching a similar level to where it was in 2020. You can see this is December of 2020. But the one thing to note is the curve is much steeper. So if you look, you know, these lines are super far away, which means the curve is steep. You can see, who knows, maybe we get to like a 2014 level, in which case there's still room to go on the upside. But this has been a pretty magnificent move in a very short period of time. So you can see we got that sell-off in bonds. And what I thought was very interesting, we're sort of going like all around the world in terms of all these different asset classes for tonight. But if we look at crude oil, crude, you can see, you know, had sort of like a mini crash here. So I was actually looking to buy the dip in oil. And I actually made a purchase of some XLE calls, you know, as we tagged this 20-day moving average. And little did I know, this ended up being sort of like a mini oil crash. So I just stopped out of those XLE calls pretty quickly. So I was like, you know, oil seems like it's pretty oversold here. But the intention of the trade was, you know, bounce off the 20-day in a bullish trend. So I was like, that reason for entering the trade is no longer there. So I just stopped out of those. So we'll have to see what happens with crude. But what's weird is, like, when you get this inflation narrative, to me it would make sense. Like, you have yields going higher, and then you have crude, you know, going higher with it. Today was weird where it was like technology blowing up, yields moving higher, and then oil also blowing up. So it was a very strange day of price action. When you get days like this, that, like, honestly, heading into tomorrow, you know, I have no idea what's going to happen. Like, there's no, like, trend to really go off of. This isn't really like a normal market. Like, things are getting very volatile. So for that reason, I think it just makes sense to have a little bit less on coming into tomorrow and to not get, like, super opinionated heading into tomorrow's action. So we have crude. Let's take a look at our sector map here. And you can see we had a nice day for the regional banks. Financials were also positive, European financials. But other than that, everything else was red. So yeah, you can see solar stocks really got hit. The ARC fund, once again, really getting hit. So a lot of progress that was made, like I said earlier, just wiped out. XLE down 4.49%, really tough move. And you can see transports held up okay, only down 0.06%, and industrials held up well also. So we're seeing where that relative strength is, and it is in these groups at the top here. If we look at our style factors, you can see again, completely red today. We had the high beta stocks finish down 2.28%. We had momentum stocks finish down 3.37%. If we take a look at some of my trades for today, I had some things that worked. Like luckily I came into today's session, I was short plug via puts. I had a SPY butterfly that I was able to make some money off of, but I took some stops on trades as well because like I'm a trend trader. I want to trade positive trends, but I did have some exposure to tech that I had picked up. And when I look at this trend in tech, this is just not really, like, of course, like I can see the futures, we're getting a little bit of a bounce here. And I went into the close knowing, hey, maybe tomorrow's just a rebalance day and tech gets bid. Maybe we value, give some back. And I was like, as a trend trader, we just fell out of this monthly value area. We fell below the 50-day. We fell below the 20-day, the 5-day EMA. So I can't really continue with, a bunch of long positions in tech, really by going off of a repeatable process. If I did that, it would just be like, well, I feel like tech's going to go up tomorrow. And, I just can't do that. So yeah, NQ, really tough price action for today. So days like this is where you have to make, some tough decisions. And for me, above all, it's always, I need to manage my risk here. Because I know a lot of times there's that inclination of like, let me try to make back, the drawdown that I took, that sort of thing. Or like, let me double down. For a situation like today where the price action was just like really wonky, for that, it's like, let me just take some off and sort of reassess. So I had a SPY butterfly, like I said earlier, the 380 by 390 by 400. I was able to take that off, the remaining 2/3 of it, for $5.01. I paid $3.58. So that was a nice trade, early in the morning. I did get long these XLE calls, and I got an average cost basis of $3.60. Ended up getting stopped out of those for $2.81. I said this is not the dip I was looking for, because essentially like we ended up getting sort of like an oil, really cratered. I took a stop on some Q's calls, entered those for $17.80, got stopped out for about $1 loss, $16.71. Micron, I closed out the remainder of my call calendar spread for $5.14. I had paid $3.81, so nice gain on that Micron calendar spread. And then I took a hedge in the Qs overnight. So we'll see what happens with this hedge. Like, honestly, in a perfect world, I don't make any money off this hedge. But given the price action that we saw today, I really just have to put a hedge on, because there's always, when the trend changes, and like even, when I looked here, let's see, I'm going to pull up, right here. And this is not the 5-minute chart. I want the daily chart. Yeah, so you can see this volume shelf here. We closed below that volume shelf. So this is like a good line in the sand area for the Qs. And, it's one of those things where like tomorrow maybe we just rip right back over this line, in which case like, okay, I'm going to close out my hedge. Qs are turning bullish. But just in case this ends up being that, rollover, I want to have at least some sort of hedge in place. So yeah, Q's definitely reasserting their bearish trend. And then in terms of some stock trades, let's take a look here. Yeah, so I got long some Boeing earlier in the morning, just some common shares. And let's see Boeing. I'm sure this one closed lower just because of the volatility. Yeah, Boeing, the technical pattern here, still looks pretty intact. So yeah, these are just common shares. So I was like, yeah, no worries about that. So yeah, Boeing's still looking okay, even though got hit by this volatility as well. And then I got long some GTBIF, which had some nice earnings numbers. And this one as well, really got taken over by the volatility of the day. But this one's in a nice pattern. You can see it's sort of putting in like a V bottom. And yeah, they had really strong results. So that about does it for my trades for today. Yeah, today was definitely an expectation breaker. And I think, for most traders, it's like, how are you going to react when you're expecting something and then the opposite happens? Like, you can dig your heels in, and, have that mentality of like doubling down, but that could really come back to bite you. So I think that's like the learning lesson for today in terms of risk management. Like, you want to make sure that, okay, something doesn't seem right. We're having this weird action in crude, weird action in rates, weird action in NDX. I'm going to take a couple of chips off. This isn't really like an environment where I want to get too aggressive. And then if we take a look at our options order flow here, yeah, you can see this was another factor for me where it was like, okay, I'm not going to dig my heels in here. So one thing that I was noticing in the morning, we did get some hedges going up, mixed with some bullish activity as well. Like we had some Tesla calls, Alibaba, SPY calls. But yeah, you can see here, you got some hedging activity in the Qs, all that good stuff. You can see some hedges coming down for SPY. But then what I noticed is like during the heart of the sell-off, maybe this is foreshadowing we're just going to like rip tomorrow. But really once the trend changed at 2, I just noticed it was all, call buying. Or like you can see here, they're just going. This is when the market really started selling off. SPY calls, SPY calls, SPY calls, SPY calls. You can see a hedger right here. And then even into the close, just buying more calls. So I was like, that's not really what I want to see when the market's really tumbling. I want to see like that panic put buying. And it looks like there were some latecomers that came in like right on the close. And they purchased some IWM puts. So yeah, we'll have to see what happens. Tomorrow, I think, is anyone's guess. Like we have, like I said, the quad witching. We have the index rebalancing, options expiration. So yeah, going into tomorrow, I don't really have much in the way of expectations, which is why I tried to just clean up the portfolio a little bit and get myself a little bit more neutral. So that being said, hope you all had a good trading day, and I will see you all tomorrow in the pre-market webinar.